Hey, everybody, welcome to This Week in Pre-IPO Stocks podcast. We are live in Chapel Hill, North Carolina today for the UNC Wake Forest game. At least Clint and I are. So, Nick, we'll have to get you out here for the next one, right? But Tar Heels are now number 3. We just saw it. So, congrats to the Tar Heels. So, with me, I got Nick Fusco, CEO of 8View, a pre-IPO secondary market pricing company, and Clint Sorensen over here, Chief Investment Officer at WellShield, an outsourced CIO and investment research company. Okay, 3 topics. First one we want to hit on is Reddit, right? So Reddit just announced that they're doing their IPO. I think they're going to put out docs at the end of February, and then the IPO is going to happen in March, right? But Nick, I knew you pulled together some data on Reddit, or I'm sure you've used it. I know I have, and I'm sure Clint has too. But what are your thoughts kind of on Reddit, on the IPO? Is this the right time? What do you think the prospects could be for the company?
Sure thing. So is this the right time? Who knows? But did we kind of see it coming in a way? Yes. From the data, we ended up seeing a lot of the volatility of Reddit's shares just completely get sucked dry out of the secondary market. And sometimes we're seeing that that's a decent indicator of something is going to either have a funding round, some sort of M&A activity, or IPO.
Yeah.
So over the
Insider
last
trading, right?
Well,
Yeah.
I mean, you really want to mitigate as much as you can, right? Not all of these are going to be able to get ROFR'd given the amount of SPV activity, but in this particular case, we saw volume really disappear. It wasn't the most hotly traded name.
Right.
We are seeing it down from Jan 2023 to date about 20%, and hopefully we're going to see that this could indicate a reasonable IPO. I mean, if there's activity that people want to have, and hopefully it's pent up to access this, and this is going to be one of those names that gets a ton of meme activity, a ton of interest on its own network as well, which is going to be really interesting to watch.
Right. So Nick, using your data, so I pulled from PitchBook, the last round was 10 billion, right? In August 2021, using your data over at 8View, right? I got that down 43%. So my math has them at like a $5.6 billion valuation. The valuation and price hasn't been listed yet, right? But Clint,
Correct.
my understanding is the company's not profitable yet, right? So there's another one of these kind of IPOs where the company's coming and it's not profitable. I mean, what do you think, kind of with a 2021 round, right? That was kind of, things were rich back then, and then the company's not profitable and coming. Like, do you think that not being profitable might hurt their prospects in the IPO?
Yeah, I think in an area of higher cost of capital, right? You guys start thinking of profits over promises. Promises being these growth, long duration companies, where that was kind of all the rage back in 2021. Now it's really about, all right, show me what can you do to manage the cycle from a business perspective. So I think profits are going to always reign supreme in this type of market, and I think that could hurt Reddit. I mean,
Yeah.
knowledge is, we're only going to see in hindsight whether that's
Right.
accurate or not.
Right.
But my guess would be that that's going to negatively affect the price if they're not profitable.
Yeah. I mean, a couple of years ago, it was, I think, okay to go profitable without
Yeah,
being
yeah,
profitable.
it's
Now
tons of
it's
liquidity
different, though,
chasing
right?
everything.
Yeah.
Now,
Right.
now you have to overcome a certain cost of capital, and that math's just a little more difficult.
Yeah, I got you. Okay, so Nick, I'm sure you've probably used Reddit before. I know I have, right? Any thoughts on just the product itself? Like, what do you think? It's different, right, than Facebook or Instagram or X. It's a different kind of person that uses Reddit, right? So, like, what do you think? What do you think of the product, right?
Absolutely. So I mean, compared to the Instagram, Snapchats, TikToks of the world, the average time spent is definitely a fair bit lower. We've done a quick analysis comparing it to a lot of the other platforms uh, to compare to, is it more niche or general? Is it more community driven and things of that nature? So hit us up, contact 8view.com to get that report. But at the same time, I think it really does stand the test of time being a valuable player out there. And it's one of the few that really hasn't had any sort of public company ownership or become public itself. And yeah, I think that profitability is an issue. But
Yeah.
coming into the IPO, I think Reuters reported they're only floating about 10% coming in, and they're
Okay.
still growing at a pretty decent clip. I think 2021 they were at a bit under 400 million. and now they're a bit over 500 million of revenue.
Okay.
So, I mean, for a company of that size, the growth is still pretty impressive.
That's pretty solid, yeah. Because the
Yeah.
company's been around for. Have you ever used Reddit? What do you think?
Yeah, I mean, I've browsed Reddit around certain topics. Obviously, if you Google search anything, it's usually going to pop up.
It is true. That is true. Yeah.
I mean, they've got their, you're usually going to find something on there that's worth a read.
Right. Yeah. But also too, like Clint, you talk about data a lot, right? I mean, I have to imagine you could use that data coming from Reddit for like training AI models, and just like X is doing with, with xAI, and Facebook is doing with their models, right? I mean, this could be an AI play potentially as well.
Anything can be a data play now. Right?
Yeah.
It just depends on how well
I love it, Clint.
well they've set up that infrastructure.
Yeah. Okay. Let's switch gears real quick to the private market. So there's I think some really interesting trends that have come out and started to like mature a little bit over the last year, really. But so Databricks and Canva both came out and said that they're doing tenders. Canva announced theirs kind of in December, and they're wrapping it up now, but it's oversubscribed. They're doing 1.5 billion share sale, right? So that's or 1.5 billion total raise. That's a big nut. And then Databricks, there's buzz about them going public. I talked to an employee over there the other day, and they said the only thing that anyone talks about is when they're going to go public, right? So that place is primed and ready to rock and roll. But other companies that have done like tenders, and some of these are doing them on like consistent scale now, like SpaceX, Stripe, OpenAI, Anthropic, Databricks, which I mentioned earlier. ByteDance did a buyback, right? A buyback. So like, and these are big tenders too. They're like 750 million plus is like the smallest one that I've seen. So these are big numbers, right? So, so the trend that I'm seeing, and this is what I want to get your guys' opinion on, if this is like good or bad, right? Overall, for maybe just the general markets and the private stock markets, but these companies are going to like VCs to raise this money instead of going to a banker. So it's not coming from pensions, endowments, and foundations. It's coming from like a VC that turns around and goes to like high net worth people, right, to raise this money, instead of going to like a pension fund and having them come in. Like, do you got? And well, so there's two things that I see that's nice. True, fair point. But you've seen a lot of SPVs. Like that was interesting about Anthropic. They did an SPV with Menlo, right? And that was kind of like everyone was like shocked about that, right? So, like, what do you think? Is that a good idea? To me, it seems like it's good for the company. The CFOs doesn't have to go around and like hat in hand and try and raise money from these pension funds. It's all smaller checks that get gobbled up, right? So a lot less due diligence, a lot less work for the home office team, and then the fees get shifted to the buyers. So like the company's not paying that 6 or 7% investment banking fee, right? The buyers are paying to get in.
And it may be about ease of source of funds too, right? So if you think about pensions, they might have, or big insurance companies, some of the more traditional sources of capital, public funds, they might have a significant amount of capital tied up in illiquid opportunities that they're not exactly able to get liquidity out of. So they're saying, hey, this might be a new source of liquidity. I mean, you've got a lot tied up in commercial real estate. You've got a lot tied up in private equity, private credit, and a lot of that's not liquid or hasn't been liquid in the past market. So I think some of this might just be these organizations adapting to the source of capital that's right there.
Right.
And I think that shows the depth of the market, or how deep the market actually is that they're able to find these alternative sources of capital. Because back in the day, if one source of capital dried up, everything dried up.
Right.
And we saw venture get hit really, really hard. But now I think you're starting to see some improvement in terms of the depth of these markets. But I think that's the silver lining I like to see is, it might be different, but at least they're adapting and there's market depth and they're able to source liquidity from other markets.
So overall, a good trend, right?
Yeah, this is a great trend. Anytime you can, the more liquidity sources, the better for these organizations. Right.
Okay, so Nick, like, what do you think? Like, your take on? You've lived in the secondary market for a long time, right? Like, is it this? You kind of agree with that sentiment? Is that this a nice development, positive development for the companies?
I agree wholeheartedly. I think this just gives those companies even more options, and when they have more options for liquidity, really, or control of where those shares are going to end up, that's a great thing. And I love that Menlo Ventures stepped up for the Anthropic play. I think that's so cool because SPVs in a lot of cases started to get a little bit of a bad rap and getting written up in the news, and then you have some of the more prestigious players really justifying, it's a very clear means to to getting liquidity in the hands of people that would really benefit or are happy to pay the appropriate fees for access to names that they couldn't otherwise get. So I think this is a perfect play for both the company and those that are interested in getting access. Traditionally, I think you want to find the right holders as your company matures until the very end, when those holders ultimately are more of your funds and ETFs and things like that. So nothing bad to say about this in any regard, except for sometimes, I mean, there's so much interest, you can't even, you open it up and suggest you can get access to something like a Databricks or a Canva, and there's so much demand that you can't fulfill it in the end. So that's the only thing that we're starting to see here, which is super, super interesting from our brokers and buy-side clientele.
But I mean, just that statement though, think about that. Like these things being oversubscribed. Like I heard this last SpaceX tell us 3x oversubscribed. I mean, there's so much demand for these companies from private investors, individual investors. That it's like the thing that I love about this is you're getting, if it's pension endowments and foundations like it's been in the past, I mean, that's fine. Ultimately, a pension endowment foundation, well, definitely pensions, right? That kind of flows back to individual people, right? Maybe not so much on a foundation or endowment perspective, but certainly on pensions. I love this because now like individuals can participate, right?
Decentralization.
Yeah, it's great.
You can't unsee it. And once that trend started, I love seeing it in everything, and you're seeing it here.
Yeah, and
awesome.
it's more. I think it becomes it's a deeper market, like you were saying, wider market. You were saying it becomes, I think, more sophisticated because you really let the market. If you're getting something 3x oversubscribed, it's probably worth more than the round that it was just at, right?
There's wisdom in the crowd.
Yeah, man. So like, there's some really interesting things that are happening here. What's also encouraging, and this is totally self-serving since I run a venture capital business focused on the space, right? But like, if this stuff is happening, that means more people are interested, right? This private stock market thing's not going away. Like, it's only going to get bigger, right?
And I love it because think about it, like in our business, right? You and I share a vertical, which is the private wealth managers.
Yeah.
And really RIAs. And if you look at RIAs, this is they all started equating the way they got paid to being a fiduciary, which I can argue that that doesn't tell you whether you're a fiduciary or not. Now, they're kind of getting back to their roots. Like, hey, I'm giving you access, right? Because think about it, financial planning and a lot of the way that the business is run now became because access became democratized where it was easy, right? You had discount brokers usher in. And
that's right.
They had to reinvent themselves. Now you're like, hey, I've got access to this private stock market. There's tons of demand. That gets exciting. That's a way for advisors to grow their reach and impact more lives.
Yeah, it's true.
Have more people tap into financial wellness or financial planning.
Yeah.
I love it. I think this is a great thing.
Well, it's a core function of the financial services market too, right? Like providing access to either information or product that you wouldn't be able to get to by yourself, right? I mean, that's like mutual funds and ETFs, just pooling people's money together to access new markets.
Yeah.
And that's effectively what a lot of this stuff is. So, okay, cool. So last topic here, fellas. So xAI, okay, doing a raise right now. Elon Musk, large language model business. So they've already raised 500 million. The goal is to get to $1 billion. They're going to do you ready for this? $15 to $20 billion valuation on this company. All right. So here's the thing that's interesting. So
X,
that's gross, huh?
No, xAI. So xAI is its own company.
Okay.
Right.
Yeah.
But here's the rub. So one is just, what do you think of that?
So that's worth what X is valued at, right?
Well, I would say Anthropic's at 18. So like xAI is coming out and doing an Anthropic level evaluation kind of right off the bat, which is super interesting. Now, so that's an interesting talking point. The second is Musk came out and said that X is going to own 25% of xAI. Okay. So I think the last round, if I remember correctly, for X, it was like they did an internal valuation. I think it was at 12. Nick, tell me if I'm wrong here. Maybe you remember. I'd have to go back and look at that.
I remember in our podcast episode we were talking about it was like 12 to 17.
It was in the teens. Yeah. So it was we can say that it was in the teens, right? So like
you guys have a better memory than I. So
like 25% of a company that's at $15 to $20 billion is material. I don't think that was baked into the valuation, right? When they were doing that internal valuation. So, okay. So maybe Nick, first thoughts. What do you think about xAI coming out of the gates at a $15 to $20 billion valuation, right?
I mean, that's pretty bold.
I mean, they're raising the money. They're raising the money, right?
How much have they raised?
500 million. They're halfway
of the billion.
Of the billion. Yeah, it's been out there for 2 weeks. I'm getting calls now. They're off. People are offering shares. So
yeah, it's super interesting, and I really just digging into that other point. If it's going to be a quarter owned through X or Twitter, I mean, yeah, that was never baked in, and I know that Elon is going to twist those figures to say, oh, we're doing way better now than we used to be, and all that, because you could bake that like a quarter of that in. That's outrageous. $5 billion bucks. I just feel like these companies can spin up so fast and get these valuations so high because there's some credibility behind the teams, and their capacity to create amazing LLMs, and they have access to data clearly through Twitter or X, which in and of itself, to Clint's point, is always a huge power play here. No doubt they're looking at you when you're driving your Tesla, or will be in the future. So you see if you're looking at McDonald's or you're looking at Wendy's. But I do feel that some of these valuation jumps are so fast, they may not be as defensible as you might think, and it might not be as fickle as the entertainment markets. Like, look at things like Snapchat come and go and then come back again.
Right.
I feel like these growth trajectories are unsustainable, and one will take off or two will take off, but they can't all be valued on this exponent or beyond exponential ramp.
Yeah. So what do you think?
No one knows how to value data as an asset class yet.
Right.
And I think it's just like when software as a service came. The company that first figured out how to properly value software as a service really was able to level up. Now, they went higher than what people were valuing software companies, but I think this is just still the Wild West. To Nick's point, you just have no idea how to value these things. So why not shoot for the moon?
It's true.
And just go nuts, right? Because if you can raise the money and no one's going to give you a valid argument why it can't be worth that, I think that's going to be the interesting play over the course of the next, really probably next year, but the next couple of years is going to be, how does this AI craze shift into a more methodical calculation of true long-term growth and value?
Right. Yeah.
And I think it comes back a little bit.
Oh, it's 100x revenue multiples. I mean, these are like, that's bananas, right? So
right. So maybe this goes just like whether it's early stage or late stage VC, you look at the founder, you say, what have they done? Everybody poo-pooed Elon. Oh, what's Tesla going to do? The electric cars, it'll never become anything. And there you go. What's SpaceX, that project going to do? Look at the numbers. I mean, he's posting massive growth and huge numbers there. So who's going to bet against him?
Well,
so
look, but this is the thing. I was mentioning this to you maybe this morning, right? But like, OpenAI, Altman's been out talking to people, right? He did a Y Combinator presentation, right, to those guys. He used to run that, and he was telling, my understanding is he was telling these folks, if you're building something for 2025 or 2026, you have to assume that AGI, artificial general intelligence, right, which is like a computer basically like self-aware.
It's a computer programming itself.
That's like,
see ya.
So imagine that happening. Like, what is that worth? Is that $1 trillion business? Like, for the first, if xAI solves AGI, is that $1 trillion? Like, what is AGI worth? That's the thing that's to your point, Nick, right? Around like a Tesla.
Look at the productivity of every single programmer, attorney, accountant, financial advisor. Like, you've got to take the whole entire white collar base of productivity globally.
That's a lot.
And you have to come up with a figure, and that's what it's worth.
That's a lot.
If not more than that.
Because if you discount cash flow, if you discount cash flow on that, that's a huge number, right? But then to Nick's point, like, if you got multiple companies out there doing this, right? You have multiple AGIs, which I'm sure that's what will happen. You know what I mean? Then it'd be like, well, what customers do you have? And it probably gets back down to normal. Like, not everything's going to be 100x revenue multiple all the time.
I think they're valuing it wrong on this revenue multiple anyway. I think, like I said, I think it comes down to what's data now worth. We really haven't thought about that fully. We've thought about it a little bit, right? From a marketing perspective. The old model was, how much is this data worth to advertise?
Let me ask you a question though. Do you think the data is still the most important thing if the model has reached AGI, or is the model becomes you think the data is still more?
Data is important, right?
Yeah.
Because what are you building? What are you building for?
Well, they would both
You have to
be
have
important,
someone
I would think.
consume what you're producing.
Right.
I would err more towards Clint's. I mean, if you don't have the data to power it up, there's really not much for it to work off of, right? So even if you compare, AI to a really top end data science person, you give them one a hell of a lot more data, that's going to outperform the other.
Yeah, fair. Okay, fair point. Yeah, I got you.
We need to invest. This gets me back to real assets. Investing in the grid.
Yeah.
Otherwise, it's going to be the matrix.
Yeah, I got you.
Right, we're going to be plugged into the machine, powering it. Like
there's going to be a whole bunch of picks and shovels, new picks and shovels. I mean, you're seeing it with NVIDIA already, but I'm sure, to your point, there's going to be a whole bunch of new.
I think it's data infrastructure, electricity infrastructure. It's the entire grid.
Yeah,
I think this is a meaningful. We have to have policy and not fear-based policy meet this potential, because it is potentially awesome.
Yeah,
but we have to have it.
There'll be some pain in the transition.
Either ego pain or some sort of pain, but we can figure it out.
Well, this I got to tell you, it's like an exciting time in the space. Like the AI stuff is really wild. These trends that are happening in the secondary market, this kind of like evolving private market, is an interesting place too. And I do think we're going to see some more IPOs in 2024, right? Yeah. At least that's my hope.
And think about wearables. Like I can't get off this. Like when you start thinking about data, you start thinking about wearables, everything you do. And then you start thinking about universal basic income, right? Like think about Alaska paying every resident for living there, right? For their share of oil. Think about that. Like your data becomes so much more valuable in an AGI scenario that your universal basic income comes to you in the form of how much you're plugged in and how much data you provide.
That is interesting.
Right? Think about, again, it gets back to blockchain, this peer shared network, right? Where you're distributing the power.
Well, you got to own your data though. That's the key, right? Like you can't check the box to Facebook saying you can use my data for whatever you want.
Those days are gone.
Yeah, you got to stop doing that.
You got to make
right.
It's worth something.
Yeah, it's worth like your house. Like you wouldn't just give your house to somebody, so you should just give
an auction market-based system.
Yeah.
Look, the government makes money off this too because there's increased revenues. They get to add a czar, personal data czar or whatever. But there's a path forward to this being pretty remarkable.
Yeah.
And yes, it
should add it to the Bill of Rights.
Should.
You have a right to own your own data.
Data is yours. That's right. But all of a sudden it increases. You could easily think about productivity, think about poverty being gone, think about what it does in terms of the standard of living.
Yeah.
It's meaningful.
Yeah.
Speaking of, did you guys watch? Everything this week has brought me back to Milei, his speech at the forum. Oh,
love that speech.
But I think.
Did you watch it? Did you watch it in Spanish or did you watch the Heijin?
The AI one was amazing.
In English.
Yeah.
When did you watch? Did you do the Spanish one or the English one?
My Spanish is okay, not that good because there were going to be a lot of computations. So no, I watched the AI enabled Spanish to English one in his accent. I loved it.
It was
really
great.
That in and of itself was amazing.
What did you think of the speech? Not to go down the rabbit hole.
He's a libertarian. But I love the guy.
So much.
I know Clint loves him. Yeah. But I really appreciated what he had to say there. I think he picked his battles very, very clearly because I think some of his ideas might go a little off the rails. But within an hour, I'm texting a friend down in Argentina. I'm like, hey, what do you think of this guy? Like, what's going on here? Everything's coming back or what? And she's like, oh, it'll take some time, blah, 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 blah. But he got me all fired up. That was a really nice thing to watch.
I love watching that guys. You like the speech?
Oh yeah,
of course.
He's coming out of nowhere.
Yeah.
I love the speech. Like, what are you talking about?
It was great. I mean, I showed it to my kids, right?
Really?
Yeah. I showed it to my kids.
Davos.
I was just like, I wish we had.
I know.
I haven't heard a speech like that out of a U.S. politician in a long time, right? Where there was like real conviction behind it and
You know what our slogan
and
is?
independent thought.
I'm stealing a slogan from Paul Mikowski.
Go ahead.
Anybody under 80 should be our campaign slogan.
Anyone.
That's who we want. Anyone under 80.
That's great.
Let's go.
I saw a stat. Well, somebody showed me a stat like Bill Clinton's younger than both Trump and Biden, and he was president
Now,
20
and he was
years ago.
president 20 years ago.
It's like, that's
Oh my God.
too much. It's too much, man. So it's good. It's good.
Like this guy came from nowhere. He's right.
If you haven't watched, if anyone listening hasn't watched that speech, you should go and find it, right? And do the Hey Gen. It's the Hey Gen AI.
But he's a wild
incredible.
man. Like I didn't expect it. That was what I think. I was very pleasantly surprised.
Oh, if you Google him, you should watch some of the TV interviews he does down in Argentina. He's got like veins popping out. He's like
cussing like a sailor.
It's wild. He's intense. That guy's intense. So that's it. Okay, let's end it there. Nick, thanks for this, buddy. I appreciate it. And we're
enjoy
doing
the game tonight, guys.
Sushi.
New York.
Yeah, we're doing sushi in New York soon, man. It's coming.
You know
All
it.
right, man?
We'll do it. We'll have to record there, all three of us.
Oh, could you imagine over sushi?
That would be
fellas?
very, very good.
Yeah.
All right.
We'll
All
have
right.
to.
Well,
I don't know. We'll have to wear like GoPros or something.
Done. We'll figure it out.
I think that'd be hilarious.
We'll get it sorted.
All right.
This is good.
Well,
All right, man.
enjoy the
Thanks.
time.